Bitcoin's price has plummeted below the critical $60,000 mark, a deeply concerning shift for investors. With the current trading price at $59,704, let's explore the implications of this drop and what it means for the future of cryptocurrency. Bitcoin's immediate future is precariously balanced as it struggles to reclaim the crucial $60,000 support level. This price point is significant not only for traders, but also for the broader cryptocurrency ecosystem. Should Bitcoin fail to regain this level, it risks testing the $57,300 liquidation zone, a scenario that could trigger heightened volatility and force many leveraged traders to exit their positions. This potential cascade of liquidations would further exacerbate market instability, creating a challenging environment for both short-term traders and long-term investors. In the context of upcoming events, the June 26th options expiry looms large as a potential inflection point for Bitcoin. Historically, such expirations have been known to reset market sentiment, and a resurgence in institutional buying could provide the necessary momentum for a price rebound. However, the market remains cautious. On-chain data indicates that Bitcoin around $60,000 is technically undervalued, yet the current nervous sentiment among buyers suggests that any sustained recovery will hinge on renewed demand. Looking beyond immediate price movements, investors should remain vigilant regarding broader market dynamics. Developments such as Binance's ongoing operations in Europe, the Ethereum Foundation's restructuring efforts, and MoneyGram's new role as a validator on the Solana network could significantly influence market trajectories. Each of these factors contributes to the evolving landscape of cryptocurrency, shaping investor sentiment and potential price action. As we navigate this uncertain terrain, one pressing question emerges. Will Bitcoin manage to regain its footing and stabilize, or are we witnessing the onset of a more prolonged downturn? The next few weeks will be critical in determining the trajectory of Bitcoin and the overall health of the cryptocurrency market. Investors should prepare for a period of heightened scrutiny and strategic decision-making. Understanding how we reach this point involves several intertwined factors impacting the cryptocurrency market. Over recent months, retail investors have increasingly favored AI-related equities, drawn by their impressive performance compared to sluggish cryptocurrencies. This shift has diverted significant capital away from digital assets, putting immense pressure on Bitcoin and its peers. Compounding the issue, regulatory uncertainty has loomed heavily over the market. Key legislative developments, including the U.S. Senate's recent passage of anti-CBDC legislation, have raised alarms among crypto enthusiasts who fear that such measures could stifle innovation. Additionally, the Department of Justice's seizure of he-owned infrastructure linked to crypto laundering has further unsettled investors, creating a climate of fear and hesitation. Moreover, Bitcoin miners are grappling with a challenging quarter, which adds to the sell-side pressure. The operational costs for miners have surged due to fluctuating energy prices and increasing network difficulty, exacerbating their financial strain. The culmination of these factors has set the stage for today's turbulent market conditions. Furthermore, the impending expiration of $10.5 billion in Bitcoin options on June 26th is poised to significantly influence market dynamics. Analysts note that the max pain point is set at $74,000. However, this level may distract from the more immediate concerns surrounding Bitcoin's current price action. The combination of shifting investor sentiment, regulatory challenges, and miner difficulties creates a complex landscape for cryptocurrency. As investors navigate these turbulent waters, the market is likely to see heightened volatility in the coming weeks. Stakeholders are keenly monitoring how these factors will unfold, particularly as we approach the expiration of significant options. The outcome of these dynamics will be crucial in determining Bitcoin's trajectory, especially as institutional interest continues to waver amid ongoing uncertainties. The recent plunge of Bitcoin below the $60,000 threshold marks a significant moment in the cryptocurrency market. This decline is not merely a numerical event, it symbolizes a notable shift in investor sentiment, revealing a potential weakening in demand. Historically, the $60,000 level has been viewed as a psychological barrier, and breaching it could set off a chain reaction of further declines if the price does not recover quickly. Immediate consequences of this downturn include heightened liquidation risks for traders who are holding leveraged long positions, particularly those near the $57,300 mark. As these positions face liquidation, it could trigger a cascading effect, amplifying the market sell-off and driving prices even lower. The context of this decline is crucial. Over the past year, Bitcoin has experienced a roller coaster of highs and lows, fueled by a mix of institutional adoption, regulatory scrutiny, and macroeconomic factors. The recent shift in retail capital toward AI stocks indicates a broader trend of risk aversion among investors. This shift not only reflects a changing appetite for risk, but also suggests that many are seeking safer, more stable investment opportunities amid economic uncertainty. Consequently, this trend could slow any potential recovery in cryptocurrency prices, as investor focus diverts to sectors perceived as more promising. The implications of this market shift are profound. It affects not only individual investors, but also the overall stability of the cryptocurrency market. A sustained decline below the $60,000 mark could signify the end of a bullish cycle, ushering in increased volatility and uncertainty. For many, this could mean reevaluating investment strategies and expectations within the crypto landscape. The potential for regulatory changes also looms large, adding another layer of complexity to the market dynamics. Looking ahead, the market is at a critical juncture. The next moves by investors will be pivotal as they navigate these turbulent waters. If the downward trend continues, it may prompt a reevaluation of Bitcoin's long-term viability as a store of value. Conversely, a prompt recovery could reinvigorate investor confidence. The coming weeks will be crucial in determining whether Bitcoin can reclaim its lost ground or if it will spiral further into uncertainty. This morning, on June 26, 2026, Bitcoin's price fell below the crucial support level of $60,000, trading at $59,740. This decline marks a significant psychological and technical breach for the cryptocurrency market, raising alarms among investors. Over the past week, Bitcoin has faced sustained selling pressure, declining by more than 4.79%. The market reaction has been swift, with Bitcoin approaching a precarious $57,300 liquidation trap for leveraged positions. Alongside Bitcoin, other cryptocurrencies also suffered losses. ETH dropped by 4.9%, now priced at 580.61 cents, while XRP fell by 4.2% to 16 cents. The broader context reveals a shift in investor sentiment. Many retail investors are pivoting away from cryptocurrencies towards AI-related stocks, a trend indicative of a broader risk-off approach. This shift is not merely a fad. It reflects growing concerns over regulatory scrutiny and market volatility that have plagued the crypto space for years. Investors are increasingly wary of the potential for further regulatory crackdowns, which could disrupt the market's recovery and diminish investor confidence. The current breach of $60,000 has left many investors anxious about the potential for further declines, as they recall previous market downturns. Historically, Bitcoin has often found stable support at key levels, but this time, the market appears more fragile. The implications of this decline extend beyond just price. They impact confidence across the cryptocurrency ecosystem. Market analysts suggest that if Bitcoin cannot reclaim the $60,000 level soon, it may trigger a wave of liquidations, further exacerbating the downturn and leading to heightened market instability. Looking ahead, the outlook for Bitcoin and the broader cryptocurrency market remains uncertain. Analysts warn that unless there is a significant shift in market sentiment or renewed buying interest, the path of least resistance may be downward. Traders will be closely watching the 57,300 level for signs of capitulation or potential reversal. Additionally, the ongoing pivot to AI stocks may signal a long-term shift in investment strategies as investors seek safer, more stable returns in an increasingly volatile landscape. The coming days will be pivotal for Bitcoin as market participants brace for potential outcomes in this uncertain environment. As Bitcoin stands at a crossroads, will it reclaim the $60,000 mark or continue to falter? Share your predictions in the comments below, And don't forget to subscribe for daily deep dives into the ever-evolving world of cryptocurrency.